What's up, everybody? Welcome to today's episode of The Daily Dose. Today is Wednesday, August 10th, and we got our CPI number today, which came in slightly below the consensus estimate of 8.7%, and it came in at 8.5%. So it was a little bit lower than expected, and that sent the markets surging higher. In fact, the Nasdaq index is now technically in a new bull market. It closed over 20% higher than its June lows, and that's a big deal because a lot of people will say that now if we see some selling pressure here, it should be met with some buying. So people are now pricing in the fact that the Fed is going to ease up on their tightening, that they're going to perhaps pivot next year or maybe even start cutting rates. And I don't know how to feel about that. We knew that there would be a big move today, up or down, and it went to the upside. If we saw 8.5% out of context any other year, I mean, people would be panicking. But just because we saw 9.1% last month and we saw 8.5% this month, everyone thinks that the Fed is going to ease up. But I don't know. 8.5% is still horrendous. Even if we stay on this pace the rest of the year, we'll still finish the year over 6%, which is over triple the Fed's target. So, I don't know. I think that people might be getting ahead of themselves here with this bullish sentiment. But regardless, the Nasdaq is now in a new bull market. So the S&P 500 is not yet. I believe the S&P 500 is up around 15% from the low. And I don't think the Dow ever went into a bear market. So the S&P 500 added 2.1% today. The Dow is up 1.6%. And both of those have risen. Okay, so yeah, the S&P 500 is up 15% from the low. The Dow is up 11% from the low. The S&P 500 is still down 12% on the year, and the Dow Jones is down 8.3% on the year still. But they're up really, really high from where they were in June. And the only thing that's changed is a slightly lower CPI number, and that's about it. So yeah, I think it's interesting how well the markets are reacting. I feel like if the Fed continues to raise rates this aggressively, the markets may have gotten ahead of themselves. Also, the fight against inflation is not even close to being done. The only reason that inflation printed lower this month than it did last month was because of gasoline prices. I mean, shelter prices are still up. Grocery store is still up. All the core numbers are still up. So I think people are really getting ahead of themselves here still with this rally. But hey, it's never a bad thing to make money, I guess. It's just an environment where you need to be careful, because if we keep going higher and inflation still stays relatively high, I mean, a lot of people could get burned in this market. It is a big deal. I'm not downplaying the CPI number. Obviously, it's a very good thing that it is now down, but one print doesn't make for a trend. And I think the Fed still has to raise rates aggressively and tighten aggressively, and they still have to be extremely hawkish if they want to get this under control. I think the job is far from over. And the stock market's a forward-looking mechanism. So maybe they're saying the Fed's doing their job, they're going to continue to do their job, and we've reached the peak of inflation, so we've already seen the worst of it. That I believe the market is just being optimistic in that way. But it's putting itself in a position to where if things don't go exactly right, a lot of people are going to get burned. So let's take a look at the S&P 500. It obviously gapped up higher and then was relatively flat after that, after we got that CPI number. And, it was a big deal. We're now over a pretty big level on the S&P 500. We went over this yesterday. This line right here, this zone that we were coiled at, it's a big deal that we moved past it. This is there's been a huge resistance and support over the last over a year, about a year and a half now. So that's a big deal that it's now above this level. If it can stay up, that'll be really bullish for the markets. And who knows, maybe the S&P 500 will enter a bull market in the next week or two. But yeah, I'm still skeptical. But I would be glad to be wrong in that way. I would definitely be okay with being wrong. That's just my opinion as of right now. Let's take a look at Bitcoin. So, I mean, Bitcoin's doing what Bitcoin does. It's tracking with tech. It's tracking with the Nasdaq, and it also popped today. At one point, it was over 24,000. Right now, it's just shy of that. And Bitcoin's still relatively strong since breaking through this zone. I have a different trend line drawn on it today. This is kind of like a bigger trend line from the top of the market that could come into play. Obviously, we'd been looking at a different trend line the past couple days. That was kind of like a shorter term trend line that it broke through back here. But we didn't see a lot of strength after it broke through that trend line. So maybe the market's looking at something different, maybe something like this, that it could come up and sell off after. So, or I just struggle at. So. Nothing insanely exciting on Bitcoin. Obviously, all the news and the hype today was around that inflation number and around the Nasdaq going into a bull market. So make sure to stay tuned for the rest of the week. We're going to have a really, really great video this weekend in our weekly wrap episode. Obviously, there's a lot going on in the markets right now, so be sure to stay tuned for that. And again, thank you for joining me today, and be sure to tune in next time. Thank you, everybody.